What's up, hungry investors? Welcome back to the channel. Thinking of snagging some net lease properties? Hold on a sec. Cap rates are on the rise, hitting the highest levels since 2014 for single tenant retail. But wait, there's more. Supply is surging and interest rates are keeping deals on hold. Is this a buying opportunity or a market meltdown? Let's crack open the Q1 2024 Net Lease Report and find out. Cap rates in the single tenant net lease sector increased for the 8th consecutive quarter within all three sectors. In the first quarter of 2024, single tenant cap rates increased to 6.42%, up 7 basis points for retail, 7.6%, up 5 basis points for office, and 7.02%, up 2 basis points for industrial. Cap rates in the first quarter of 2024 represented the highest levels since 2014 for single-tenant retail properties. However, cap rates for single-tenant retail and industrial assets remain lower than their 20-year historical average by 40 basis points. Elevated interest rates are continuing to impact transaction volume, which is lower than prior years. Furthermore, a lack of 1031 exchange buyer activity is resulting in an increased supply of net lease properties on the market. Property supply in the single tenant sector increased by more than 9% when compared to the prior quarter. With limited transactions occurring, properties continue to be added to and stay on the market. Despite the headwinds in the market, certain sellers, including merchant builders or owners with upcoming loan maturities, are looking to meet market pricing. Net lease retail properties with the largest supply, such as dollar stores and drug stores, continue to experience the greatest cap rate expansion. Both of these sectors experienced double-digit cap rate expansion in the first quarter of 2024 when compared to the prior quarter. After multiple Federal Reserve meetings without any interest rate relief, investors are going to continue to monitor upcoming discussions from the members of the Federal Reserve, and any cuts to interest rates would be welcomed by net lease owners looking to refinance or sell their properties prior to the end of the year. With stability in the capital markets, the expectations from buyers, sellers, and brokers is for increased transaction volume in the second half of this year. However, an increase in transaction volume would probably have a minimal effect on cap rates, as transactions are not expected to be anywhere near the amount that they've been in prior peak markets, such as 2020 and 2021. That's it for this edition of the Net Lease Market Report put together by the Boulder Group. What are your thoughts on what's taking place in the triple net market? Do you see cap rates continue to expand and rise in Q3 and Q4? Do you think the market is shifting from a seller's market to a buyer's market? Join the conversation. Leave a comment below with your thoughts on the current triple net market conditions. If you'd like to read the full report and download a PDF copy of this report to view all the sector breakdowns by category, you can do that by heading over to our website, hungry-inc.com, or you can find the link in the description below. Thanks for joining me for this edition of the Net Lease Report. I'm Christian Cotta with Hungry Investments. If you enjoyed this video and you want to see more, don't forget to like and subscribe for future commercial real estate insights and information. See you next time. Stay hungry, my friends.
You got to be hungry.